Bloomberg Audio Studios. Podcasts, radio, news.
You're listening to Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio.
Well, according to Bloomberg NEF, New Energy Finance, the global carbon market is already substantial. It's valued at $800 billion in 2023 and projects a potential for the market to grow significantly. We're talking about maybe $1 trillion annually by mid-century. This growth depends on factors like the resolution of credibility issues and the scaling of carbon removal and nature-based solutions. Carbon credits, by the way, one of the discussions going on here at Milken with Olivia Albrecht. She's the CEO and founder of Artemeter, and she is also, I want to point out, prior to this, served as CEO at Aspiration, a climate finance and Oak Tree portfolio company offering sustainability solutions for consumers, businesses, and investors. Before that, she spent a decade at PIMCO, most recently as head of ESG business strategy. I mean, you are just all in, it feels like, from a lot of different perspectives. How would you today, what's cool about Milken is the intersection of finance with everything in our world. So how would you describe the intersection of finance and climate right now?
Absolutely. Look, as you mentioned, the carbon markets really are that intersection of climate and capital markets. And we really believe that they can be part of the solution to help us decarbonize and transition the global economy to a low carbon economy with energy dominance that's focused on clean energy. So carbon markets are really at that epicenter. As you mentioned, it's almost $1 trillion today. This is not a small asset class. It is not a small market. But a lot of people focus their effort and energy on the voluntary markets, which today is $1.5 billion, so fraction of the total carbon marketplace. At Artemeter, we're carbon investment managers at our core. We're focused on applying capital market savvy and experience plus science and integrity to help create a solution to the amount of carbon that we have in the atmosphere, which is just fundamentally out of balance.
Is the interest still there? Because there's been a lot of talk about the U.S.'s commitment to climate change goals and the idea that if governments start to pull back from some of these goals, then there might be less incentive for investors to also to pursue those types of investments.
These are the exact topics that the market is wrestling with today. We need to see clear demand signals for carbon assets. In the compliance markets, which make up the bulk of the hundreds of billions of dollars of assets in this space, they're clear demand signals because they're obligatory. They're compliance markets where there's an obligation from those entities operating in those jurisdictions, like the California cap and trade system, for example. Where we haven't seen that same demand function is coming in the voluntary markets. And I like to kid, but it starts with the name. It's voluntary carbon markets. It's voluntary. What do we need to see? More compliance, regulated, required activity.
Well, good luck with that, because you have a president who has taken us away from the Paris Climate Agreement. So how do we get there?
Well, it's interesting. The first speaker at Milken on Monday morning was Scott Bessent, the U.S. Secretary of Treasury, and he's talked about the idea of a carbon border adjustment mechanism to match the competitiveness and leveling the playing field for our U.S. companies here in the U.S. compared to the European CBAM that has an export. Anytime you export into the European markets, you're going to have to pay a carbon tax. Do you want to send, as a U.S. company, do you want to send your tax dollars to Brussels, or do you want to fund the government activity at the U.S. government? So I do think that there are parts of the U.S. administration today who are serious about carbon as being part of a tariff plan and program.
So do you think you'll see the renewed interest? I mean, Bloomberg had a great story last week about how a lot of financial firms have actually scaled back their ESG departments, some sort of saying that they overhired, given where we are now. But is this just sort of kind of almost cyclical to a certain extent, and then at some point, I don't know if we're talking to you 2 years from now, it'll just be a totally different story?
I think that you're consistently hearing in sustainable finance, so carbon as being an offshoot of this concept of sustainable finance and sustainable investing. I think you've got clear kind of consensus among institutional investors that climate, carbon, other sustainability factors are just a core part of your research function. If you're not focusing on those factors and you're ensuring homes in California, you're missing the boat. You're not doing your job right. So these factors are critical as part of the research function, absolutely. But I do think you're seeing a step back, particularly in the venture markets. I think you're starting to see real interest, deep interest in infrastructure, project finance, where you're starting to see the technology risk has passed, and now you need to deploy and scale. And I think you're seeing billions of dollars being deployed into infrastructure, project finance related activities.
All right, Olivia, really interesting.
Pretty cool.
There's still a lot more to go. Olivia Albrecht, she's the CEO and founder of Artemeter.